This is Juan with Darwin-X. Can you kindly confirm that you can hear me okay in the chat room? And then you should also hopefully see my screen now with a title saying, "How does MT4 link with the market?" Okay. Well, thank you guys so much for being around today in the middle of the summer when a lot of people are away. I will do my very best to make your time worthwhile. I really like doing these sessions on an interactive basis. I reckon you've signed up to this because you have doubts on how MT4 works in the background. Feel free to push those questions to me, and I'll do my very best to explain to you, if I can, of course, how it all works. If I can answer your questions, I will take them there and then. If I can't, then I'll just ask you to either wait for a bit later in the webinar, or I'm always happy to take some of the questions offline if they're not 100% relevant to the topic of the webinar, out of respect for the other participants. Either way, for those of you who don't know me, my name is Juan. I am the CEO with Darwin-X. Darwin-X is both a broker and a crowdsourced hedge fund where you can list your strategies for investors to purchase. But I guess that's off topic for today. If you had any more questions on how Darwin-X works and what it is, feel free to reach out to me. My personal email address, which I'll write here, is juan@darwinx. And it's always great to get feedback from you guys on things that you think I can do better, or even topics that you think would be worthy of another webinar to clarify any outstanding doubts after this one. Okay, so with enough of that said, so the topic today is to try to answer how MT4 links to the market. And for that, I'm very, very certain that you guys all know the MT4 terminal and all its many possibilities. The topic of today is really what's going on backstage. So we'll not be talking about how the MT4 terminal itself works, but what's going on so that you actually see all these market prices on your charts. So there are at core 3 core considerations that we'll be discussing today. So the MT4 platform can be used as a dealing platform where a market maker or a dealing desk quotes you a price and you both bet against each other, or which is the original design of MT4, that's how it's designed to work, or it can be used to pipe trades over to the broader market, in which case you would be dealing with a broker that does not trade against customers. So as I said, there are 2 types of brokers, well actually 3. There's dealers who only trade against customers, and there's brokers who only trade with customers against the market, and then there's broker dealers who do both, and MT4 supports the 3 ways, and I'll be discussing how all that works. If it all gets too confusing, please interrupt, and I'll be happy to jump in and try to clarify, but give me a bit more time, okay? So 2 extremes, just trading against customers or with customers, and in the middle, sometimes with and against. Then there's the notion of matching by price versus by order. So MT4 is designed to match by price, but the real market matches the limit orders, and that makes a difference, as we'll see. And then there's the notion of being a liquidity taker or being a liquidity provider. Importantly, MT4 only allows you to take liquidity. You cannot provide liquidity, which means you cannot enter limit orders into the true interbank market, which means, for instance, that your stop losses and your take profits can actually get slipped when you trade with MT4. So out of the 3 topics, let's go back. So let's discuss what dealing mode is and what STP mode is. So dealing mode in MT4 means there's a dealer who's making up the market by quoting a price, and then you can choose to trade against that price anytime you want. Whenever that happens, it's a bet, as we'll see in a second, and that's how MT4 is designed to work out of the box. So we'll cover this bit, the one with the I refer to it as a fishbowl because really you can think of it as a poker table where there's you and there's all the other customers of that dealer, and then there's the dealer himself, and everybody's betting against each other. But it's a subsection of the market that really never reaches the bigger market. That's the dealing mode. And then the other way that MT4 can work is to connect MT4 via a bridge to the broader market. And in that situation, you're trading with a broker who's sending you orders to, say, Goldman Sachs or UBS or what have you, and he's just acting as an intermediary so that you can trade against Goldman Sachs. But crucially, you're not trading against your broker because the broker is trading with you. And that has implications because MT4 works in different ways in both cases. Okay, so to stay with the dealing model, what's going on there is there's a market price at which, say, UBS and Goldman Sachs and a whole bunch of others are exchanging orders, and as a result of that, there's a price that comes out of it. The dealer who's managing the MT4 server quotes a price, a dealing desk price feed, and you're sitting with your MT4 terminal at home, and you can choose to send orders via the internet to take the dealer's price or not. Okay, so crucially, what's going on is whenever you go along the euro dollar, you take the bid price listed by your dealer, and the dealing desk will short the euro dollar. And if the euro dollar goes your way, you'll make money, and the dealer will lose money, and vice versa. But crucially, the trade never reaches the market. It stays an over-the-counter agreement between you and the dealing desk. It's really those are the only parties that are involved. Now, at that situation, the only thing that matters is the price. So either you get filled or you don't. So if you get filled, it's fine. If you don't get filled, then you have a so-called requote. The trade doesn't clear, and you have the option of placing the same trade, but not at the price you originally wanted, but at the price that the dealer now allows you after requoting you. Okay, now this is really, strictly speaking, not the topic of today's webinar, because today is about how MT4 links to the real market, and this is not the real market. This is just a dealing desk. And as many of you know, there are... Right, I can tell that Pan on Fire is following all the topic fantastically. So there's a question on when you place a stop order, what price do you get filled regarding spread? That's a fantastic question. And so basically, if you're dealing with a dealing desk and you place a stop order, then they can, you get filled at the price that you had said. But the problem is, because the price is decided by the dealer, he could essentially quote you a price designed to hunt your stop, lock your loss in, and then the price could go right back somewhere else where your stop wouldn't have been touched. And that's one of the issues when you're trading with a dealer. The issue with the dealer is that the dealer is both part of a bet, the bet you said here, like, the bet about the euro dollar, and he also gets to list what the euro dollar price is, which is a huge conflict of interest in my book, because then you're playing a football match against the other team, which would be in this case the euro dollar or the market, and also the referee. So if you're trading with a dealer on MT4 and you place a stop, then you get the dealer could get you filled at the price of your stop by just listing the market feed at that price. That's what happens in dealing mode in MT4. Did that answer the question? So you don't have slippage, but it could be that your stop has been hunted, and you wouldn't really have a way to know what was going on because it's your word against the dealer. And that's actually the bad thing with MT4. So if you ask me, so the price has been decided by the dealer, who's a party to the bet, as I was describing. Then crucially, he can also see where your stop loss is. So he knows, because you've placed it on his, in front of him, what your limit order is. So it's out for him to go and get it, which is a problem. And then, of course, the requotes. So if you think you're going to get a price and you send your order and then you don't get filled because that was kind of already off limit. So the price you saw wasn't what you get, is what you see. So that's so much for the dealing mode on MT4. Now we talk about the other extreme. So we've been talking about a situation where the dealer trades against customers and makes a market. Now we're talking about the opposite position, which is DMA or direct market access, whereby a piece of software called a bridge connects MT4 server with the broader interbank FX market. And that's what this is the direct market access, whereby your trades are processed straight through to the market, which is, as we'll see later, is done by orders. So matching takes place through orders, not by price. So up to now, the volume of the size of a trade wasn't even a question. The only thing that got listed and the only thing you see on MT4 really is a single price. And as we'll see in a second, that's kind of just part of the whole truth. So just for clarification, how does MT4 work in bridge mode? Well, whenever you go long the euro dollar, the DMA broker takes two contracts at the same time. On the one hand, he's going to be your counterparty, the way a dealer would be, and he would be short the euro dollar. But unlike a dealer, at the very same time, he would go long the euro dollar to trade with you against the market. So you can think of as a broker as someone who is between you and the market, who's kind of covering your identity so that the market doesn't really know who he is trading against, which is kind of useful because if you're a systematic winner, that can be to your advantage. Otherwise, people don't want to trade with you. That's why I say dealers kick out systematic winners or scalpers, because they, if they always lose against you, they don't want you anymore on the poker table. So far, so good. Right? Okay, I'll assume yes. So now there's the question of the market price. Everybody's talking about the price reaching one level, reaching the other level, and what have you. But remember, I work for a broker, and we have like a help desk supporting customers. And you would not believe how many people actually spend years trading without really knowing how the market price comes together. So at the risk of boring you, I'm just going to do a little bit of a primer, and I promise you it's going to get more interesting in a second, because if you dig down, you really get down to interesting stuff. So the first thing is, of course, the price is the output of bid and ask matching. But hey, I'm showing you now, and what you can see here is not one bid ask at the top, but 20. Now, why is that? Well, really, because you have the order book, and people are feeding limit orders into the order book at different price levels and different volumes. Yeah, so I've got a question that says that the daily high and low price of an FX pair varies between dealers. Yeah, so let's go back to one step. So if we go back to the bowl, really. If you think of this fishbowl, really what this is one dealer that is quoting whatever prices he really wants. He could, for all it takes, he could be making up the price and saying that the euro dollar is now at 115. And unless you had access to several price feeds, which is highly advisable, you wouldn't really know what the market price was, because the market price really it's a bet. And if you take that price, then you've accepted that was the market price, because you've made it the market price by virtue of accepting it. So dealers, and that's the big trouble with MT4 and the FX market, is that essentially any broker can make up a price and they can list it to customers. And if customers don't really know and can't tell, then they could be, for all the dealer cares, they could be off the market all the time and no one would really notice. Of course, that's when scalpers help you. And there are people who realize that if one guy is making one price, another guy is making a different price, you have the opportunity of arbitraging across different dealers. So yeah, your point is you've noticed that the daily high and low price varies across dealers, and that is correct. And that is your opportunity to arbitrage whenever the bid of one guy and the ask of another guy cross, because you can make a free profit through that. That's what holds all this in balance. And really, because there's not one market, it's actually N fish bowls where everybody's betting against each other. That's the thing with over-the-counter trading in FX. So does that clarify your question, Diaz Vista? So what we've got here in this page is basically the result of order matching within one of the few multilateral trading facilities, organized exchanges in FX, which is LMAX. That's the one that Darwinex sources liquidity from. And what's going on here is all the parties are feeding limit orders as liquidity providers into the order book. And you see the aggregation here ranked by price. So you can see, well, the top of book, which is the place where the bid and ask are closest. There's 1 million of depth on either side to get filled within this spread. And actually the spread here was crossing. So it's the other way around, and this can happen, of course, because it's aggregated across different banks, and this would be an opportunity to make free money. And then the more you want to place volumes with bigger ticket sizes, you would slip or like get fill across the book, and you see that there's more and more difference between the bid and the ask the further down you go. The spread widens. But the point is, you've got 20 different prices here, and on MT4 you just see one. And that's because MT4, as I said, is designed to match by price, not by order. Okay, so how does MT4 cope with this? Well, for starters, we have to differentiate between the concept of being a liquidity taker and being a liquidity provider. In the case where you're a liquidity provider, what you send is limit orders where you sell, well, I'll sell 10 lots of euro-dollar at 1.09737. And if I get hit, it's only going to be at this price. And if I don't, then I will not trade. I'm just going to trade 10 lots at 1.09737. That's what liquidity providers do, the ones that feed into the order book. As a liquidity taker, which is the only thing you can do on MT4 as a trader, is you can basically send essentially market orders where you want to buy, say, 10 lots of euro-dollar at the then going market price, in which case then you would say go for 1 million, you would get filled within 0.3 pips of spread, as you can see here. If you wanted to fill, say, 100 lots, then you would see that the weighted average price for those 100 lots would be a spread of 0.6, and then that the last dollar was already getting filled at what, like at 0.7 pips spread, as opposed to the 0.3 for the first dollar. Because price is a function of time and volume in the market. Why so small spreads? Well, if you go to Darwin X, this is the spread you'll get pretty much all the time. Like 0.3 would be on the higher end. Our typical spread is between 0.2 and 0.3. So this is kind of what you get in the market really right now. Was a question by Mark Fire. So if you want to check out for big volume, this was. I mean, of course, this depends on the time in the day. So, like you're saying, this is big volume with small spreads. Yeah, this was a time of very high liquidity. Of course, you could see if you took this snapshot during non-farm payroll, then the spread would be all over the place. Yeah. So it's really a question of when you take the things. Because it's a function of time as well as of volume. So I was at the topic of being a liquidity taker and a liquidity provider, and this is coming back to the question of that I got before, which is a really smart question on when you place a stop order, what price do you get filled regarding spread? Well, this is important because when you are trading with MT4, the way MT4 works, and I'll get back to it in a second, is as follows. When you place a stop on MT4, what's going on is you're sending your stop order from MT4 terminal to the MT4 server, and then the MT4 server is so the MT4 server is waiting to listen to the market price, and whenever the top of book that's fed by the market into the MT4 server touches the level of your stop loss, then you send a market order. But it's a market order, so basically you're sending this when the stop loss has been hit. And by the time you get back to the market, it could be the market has moved with you or against you, and your stop would get slipped. So does that answer the question from before, from Pan on Fire? Yeah, so that's the one. And this is I guess the most important lesson for today. So a lot of people think that MT4 orders are limit orders because they're pitched to them as such. The thing is, MT4 was designed to operate for dealers only, and in dealing mode, it does support limit orders in the sense that the dealer could take it, and there would be no slippage. But when you work with a DMA broker, like broker that really sends all the trades to the real market, the MT4 does not, strictly speaking, allow you to enter limit orders into the order book, which means you can only take liquidity, which also means that you're going to be, slippage is part of the equation. So you could get filled at a price better or worse than you hoped for your stop loss. And at times of high volatility, this is actually quite important. I mean, at DarwinX, and this doesn't really happen all the time, but it can happen. We've had issues where guys put in a stop loss, and then the stop loss gets touched during non-farm payroll, which then triggers the market order for the stop loss, and then the market then moves for, and this is the good example, for the trader, and he gets filled above the take profit, or vice versa. Yeah, so we'll get back on latency in a second, but for now, it's basically you should know that can happen. So the market can move, and because you've sent a market order, then you get filled at whatever price is there. And if the market is really volatile, then you're in for quite a ride, either for the good or for the worse. Which means you don't really want to be in the market with tight spreads during news releases. So then there's a point on connection latency, and can you check between MT4 and broker server, but between server and market. So I can tell you typical times for DarwinX. Our servers are hosted by PrimeXM and on Equinix LD4. So typical latency in and out with LMAX would be about 4 milliseconds round trip from the point where the trade leaves the MT4 server via the bridge until it gets the fill confirmation is back in the MT4 server. So it's, unless you're doing high frequency trading, in which case milliseconds count, the 4 milliseconds are really neither here nor there, because the internet trip from the MT4 terminal to the MT4 server, depending on where you are, could easily be 100 milliseconds or more. So really, out of the two latencies you mentioned, Ed, really the one that counts is the one on your between MT4 terminal and MT4 server. Of course, because the limit orders are already stored in the MT4 server, then you're really looking at those 4 milliseconds whenever you have the issue with the stop losses and so on. So it's not that bad. If your broker is co-located with the liquidity providers, it needn't be that bad. Right. So there's a question here on whether on bridging software. I do not claim to be an expert in this. I am a customer to PrimeXM. To the best of my knowledge, the 2 or 3 biggest bridge providers are PrimeXM, iBridge, and possibly Fortress Prime, but there's several, lots of software providers doing bridges. It's not a particularly hard software to build. It is a particularly hard software to build so that it's always stable. But so there's several companies who do that. But so far so good. So do you guys now understand the implications of this? Basically, because you're a liquidity taker, you cannot enter limit orders, and that means you have to live with essentially slippage. So slippage is part of the game. It's if you're in the market, you're going to get slipped. The other point is that you cannot, strictly speaking, place limit orders when you're using MT4 in DMA mode or in broker mode, which of course means that you should beware of low liquidity situations. So, and we get this a lot too. So like there's people who don't really know that when you're really trading with a broker, the market moves, and there's times when there's no liquidity. So, for instance, people complaining about wide spreads on non-farm payroll, that basically means you don't really understand how the market works. And when there's low liquidity situations, if you have very tight stops or stop losses, possibly the better idea is not to play the lottery and stay out of the market in those conditions. And that's not to do with MT4. That's actually what the market is. That's being a trader. So then there's the point of latency, and that's an important one that has already been brought up by Zoom. So the price that you see on MT4 is to start with is only a fraction of what the bigger market price, because the only thing you see on MT4 is just the top of book, but you don't see how the bid and the ask, the market depth is moving. So it's only incomplete information that you're seeing. And the other part is, of course, that by the time you see that information, it's already 1 to 2/10 of a second late by the time you see it. And of course, if you react to that information once it reaches your MT4 terminal and you get back to the market, it could be that you're then hitting the market as a liquidity taker 3 to 4/10 of a second after you've seen the price on which you chose to trade, which means, as I said, that slippage is going to be part of the whole thing. Then, and that's another one, then a lot of people then ask me, oh, so how come is it that I don't have slippage with my broker? Well, the answer is, if you have been trading for a while and you have never experienced slippage, then you're not trading with a broker, you're trading with a dealer. Okay, so that's basically the answer. So if you are in the market, you're going to suffer slippage. There's just no, the market is slippage. If you take it to the extreme, if there wasn't slippage, the markets wouldn't move. Now, what happens is at times, the best way to scalp is to connect your mouse direct to the market. The good point from Ed. Yeah, I guess that's the idea. But the point is, in the real market, you can't scalp. That's the point. You can only scalp by arbitraging across dealers who are kind of asleep at the wheel and are quoting prices that are no longer relevant to the market. So really, scalping is an arbitrage opportunity that you're doing by exploiting inefficiencies created by dealers who are not listing the right price feed. And it's kind of a technology arms war between how fast you can scalp it and how good they get at updating the price feeds. So that's the point. Basically, if there wasn't slippage, then somebody would, if the price had moved from the time when it was wired out to you on the MT4 terminal and the time it gets back, then there would be either you would have you'd have a loss in the sense that the price had moved for you and you locked in at a price which was against you, so there was a negative slippage, or there could be positive slippage, in which case, if the dealer accepted it, then you would have made a profit that you shouldn't have made, and that's the underlying way, Ed, that allows you to be able to scalp. If dealers continue doing this, then you can go around and exploit situations where that loss is your way, until, of course, they notice you and they kick you out, because that's what dealers do with scalpers. Either they kick you out or they put you on a book, they pass you onto the market, and then the opportunity to make the free money is gone. Okay, so other points that are important if you're trading with a direct market access broker. So daily at the New York close, the true liquidity providers roll over the positions, and the market is not strictly speaking closed because they still feed prices, by the market, but the gap widens quite a bit, and there's quite a bit of people who don't know that, and when they switch to a DMA broker like DarwinX, they complain and they're surprised by the widening spreads. Then, of course, as I mentioned, news releases. So if you're really trading with a broker during times of low liquidity, like news releases and so on, the fills get very, very unpredictable. And that was what I had to say today. I appreciate I've covered a lot of ground and I've not been as structured as I ought to have been. So if anyone has any question, I don't think I've done a particularly good job of explaining this today. So by all means, if there's anything which is unclear, now is the time to bring it up, either on this subject or anything which you think is related to it. Questions? All right, well, it sounds like I've done a better job than I thought, or you guys are already asleep and looking nothing to do. All right, so why have a bid-ask spread? STP is straight through processing. So the easy one, STP means, yes, straight through processing. It kind of means it's processed straight through from your side to the market. Why have a bid-ask spread? Well, the bid-ask spread really is the way that liquidity providers make money. You essentially sell something now for the bid that you hope somebody is going to buy later from you at the ask. So you've kind of, with very little risk, you're making the spread in the market. So if there wasn't a bid-ask spread, people wouldn't provide liquidity. Then What mechanism do you have to trust our broker job? Okay, well, there was an interesting site that I came across the other day, which we love at DarwinX. They're called Trade Proofer. I think that's what they're called. Yeah, so this is a pretty good site that I think is badly needed. And they offer you a free service for you to check how your broker stacks up against other brokers. I'm very pleased to say that DarwinX is, is pretty close to the top of FCA-regulated brokers at all times. So maybe that's one way for me to say that we do a good job. But nothing is better than for you to go find out by yourself and use this software, which I think has a promising future. Then there's a question about Ecn Links, some talk about. Okay, so that's a very good question. Thanks, Viswanath. So what is an ECN? So an ECN is an electronic communications network. I'll write it out for you guys. And what it does is it's connected to a lot of different providers who are providing different prices at all times. And then essentially what it does is aggregate the best prices by order. So you see all these prices are provided by 25 different banks, for instance, that are all connected by an electronic communications network. And what you see here is the best limit orders with the best, most favorable bid and the most favorable ask, so that you're creating a synthetic market depth by communicating all the different providers. Okay, so there's a question of, I meant what structural mechanism is there on MT4 that makes us sure our broker isn't cheating? Well, if you ever thought that your broker is cheating, one thing you could do is ask for the fill report. So I'll try to. I don't think I have the. Yeah, unfortunately, I'm not using my normal computer today. But you could ask for the fill or the trade log, and a true broker, Markfire, will always disclose to you what has been the log of that trade. So when that reached the MT4 server, when that was sent to the market, and how long it took for the market to fill it, and how many legs it took to fill that trade. So I guess as a general rule, if you think that your broker is cheating, then you should press hard to get the logs of the trade. And if the broker isn't forthcoming in providing them, then I would be suspicious. So I guess, press for transparency. And if you start getting bullshit, that's probably a bad indication that someone's cheating you. So then there's another very good suggestion from Manu Chopra that I should do a webinar where I cover the anatomy of a trade. That's actually a very, very good point. And that will probably be the subject of my next webinar. Thank you so much, Manu, because I'll do it. I think I agree that's something that's important to cover. Then is DarwinX an ECN? I've got a question here. So DarwinX is a broker. So as a broker, the most important thing that I think matters to you is that we get paid for getting you the best liquidity, which means if we don't do a good job of getting you the best liquidity, you'll dump us as a customer. But our incentives are squarely in making you get the best price, because if you don't make money, we don't make money either. So DarwinX is not an ECN. What we do is we source our liquidity through an aggregation software, which is part of the MT4 bridge. So the MT4 bridge connects MT4 to a whole bunch of liquidity providers, and there's an aggregation software which is doing the role of what an ECN would do. So an ECN is a piece of software, and we are a broker. It's comparing two things which are not really the same. But I take that there's a need for us to cover stuff like that. So I probably will take upon of myself to do a better webinar on precisely this topic going forward. So then there's a question on pan and fire. So if you place buy stop order for 80 and spread is 6, at what price is calculated fill before going to market? So the stop order would be placed at 80, and that's the buy. That would be the ask at which you're going. So that's basically you get the feed price touching that level, and that's when it goes to the market. So there's a question on what is the commission that we charge. Well, guys, thank you so much, because this is the time I'm getting the most commissions. I'm loving it, finally. So there's a question of what is the commission that DarwinX charges in addition to the market. So we charge a commission of $25 per $1 million. So which means that for a round trip trade, that would be $50 per $1 million, which is equivalent of 0.5 in the euro dollar of spread. So then I've got a question on, does MT4 show the average bid and ask price from all the liquidity providers? Okay, so that's important because it's showing that I haven't managed to explain well the concept of the order book. So what happens at LMAX? Well, there's a whole bunch of liquidity providers, one of whom will have put in a bid of a limit order at 1.09737. There'll be others who have put in bids at 1.09731. And what the software does is rank them in descending or ascending order. So in this case, it's in descending order. In this case, it's ascending order, so that as you go down, the spread is widening. So what MT4 shows is the top of book. The one thing that MT4 is showing you is the first row of the thing. And that's why MT4 is misleading. It is matching by price. And because you can only match if the prices are equal, it can only show one price. Whereas in reality, the market is made up of the market depth with many prices ordered so that the spread widens as you go down in the bid-ask. So it's not the average. What MT4 shows you is the top of book. It's the one where the bid and the ask are closest. That's the cosmetically more appealing one, is what is shown on MT4. So then I have a question here. What's your capitalization? I don't really know what you mean by that. So if you want to clarify, I'll answer some other questions in the meantime. Does DarwinX offer only Forex, or do we have indices precious metals? So the core ethos behind DarwinX is for us to scale good traders. So basically, if you're a good trader and you're just trading your own capital, then that kind of sucks, because if you're making 20% a year on a peanut, that's 0.2 peanuts a year. The issue you've got is not that you're making 20%, which is fantastic, but that you're only managing your own capital, one peanut. What we offer is a solution whereby you can list a Darwin, which is think of as a stock that investors can buy. And if investors buy a Darwin, they pay you a success fee, which basically means you can kind of earn money on more than your own money. The problem is that only works if you really have very liquid assets. So for the time being, we have stuck with the 40 most liquid Forex pairs, but we will have some nice announcements to make in this going forward. But I wouldn't like this to be a webinar about advertising DarwinX. So if you want to, we can follow up on this one, Manu, offline. So where is DarwinX registered? DarwinX is an FCA registered broker. So we're registered and regulated by the UK to be a pure broker. And unlike many others, we are actually a pure broker who never trades against customers. And if you want for me to teach you how to figure out whether your broker does that, I can do that for you. And then how do we get the additional historical data on the MT4 charts? How do you get additional historical data, meaning in our broker or in any broker? DZ Vista, I'm lost here. Not really sure. Any MT4 platform. So the data is fed by the broker into the MT4 server, and then your terminal downloads it from the server. So to the best of my knowledge, the non-hacked way to get more data is for your broker to have a longer time series. But I think there's ways whereby you can bypass that and install more data on your MT4 terminal. So if you want to write me an email, I think I know a few guys who are pretty thorough with MT4, and I'll try to find out how that's done for you. Then there's a question about high-frequency trades manipulating the market. Yes, unfortunately, the market is very rigged. And how do you protect yourselves against that? I don't think you can as an MT4 liquidity taker. So for you to protect yourself against that, you'd have to start thinking about moving away from MT4, really. So then there's a question about how old our company is. Our company is 4 years old. And what is the last field from the order book? I've missed that. So not sure. The question of the last field, you mean the last point on the right here, or the last row? So what this last row is saying is that there's a spread of 3.3 pips for you to close 2.9 million after you've wiped all the rest of the order book above it. That's what that's saying. So that's what that would be saying. So basically, for you to see the cumulative volume, you would have to add up to here. Then what other platforms does Darwinex offer? You can trade via Fix, and we're also developing our own platform, but that's our own little secret, something quite nice that you'll see when the time is right. Then there's a question on at what point does real liquidity cease? Well, that depends on the pair, and it also depends on the market time. So normally, I think there's about a cliff. The moment you start trying to fill 50 lots or 100 lots at the same time, that's when you're really starting to kind of get a hit. Up to 10 lots, I think you should be okay on pretty much any major pair within 0.2 or 0.3 pips. But that obviously varies by time of market and also by market conditions. So because markets are now they're getting more volatile these days, and which means there's less liquidity. And if somebody wants gold data from 2000, I don't know how you would do that because there's a restriction on how much data MT4 server can handle. So I'm not sure it's possible to go much beyond 2007, really, unfortunately. I don't think you could crop it. I don't think you can cram that much data into MT4, at least not for the more frequent timeframes. So any more questions? So actually, Manu, if you want to see monitor the order book, you can you could try this. For instance, that's a liquidity provider, so you could check that out, and you can see the market depth at different timeframes. That's actually quite useful to see how things are going. So there's a question on why data disappear when futures on oil roll. So there's a time where basically the liquidity providers are rolling the positions from one day to the next to close their accounting, and they don't really like it when new trades go in at that time, and that's the your close. Those are the 5 minutes that I mentioned before, where you can't really trade in the real market. Any more questions, guys? Right, so there's a question on LMAX. So LMAX is an organized market. It's a multilateral trading facility which aggregates the liquidity of everybody into an order book. And it's about the only provider in the market that really acts the way as an organized exchange. So with LMAX, you're not trading over the counter, you're trading according to a set of rules that all the participants in LMAX abide by. So they are not dealers, they're not taking on their own risk. All they do is facilitate liquidity from third parties, which are the market participants, for the market participants. And that's why we like it so much. So there's a question, so 2 points here. What are minimum opening amounts for Darwinex? So the minimum trade size you can place with us, and to the best of my knowledge, the minimum trade size that you can route directly to the market is 1,000 of the base currency, and that's what our minimum trade size is. And you can open an account with us for $500, pounds, or euros. That's the minimum account size. Then there's a question of Manuel Chopra, which is really good, and that's if you want to trade bigger sizes, you need a strategy that can handle the slippage you get when trading 100 lots, etc. That's exactly right. Yeah. So that's that's at Darwinex we have one of our investable attributes is the scalability, and that's basically to say that one strategy you can make 100% on 1 million is great, but a strategy can make 100, say 20% on 100 million is better because the P&L for you or for the investors is more predictable because you're less vulnerable to marginal market situations. So then there's a point of Mark Pronovich. If we take US clients, unfortunately not for the time being. We don't have a US license, but we're about to become an introducing broker to Interactive Brokers. So what we're working on is for customers of Interactive Brokers, we will offer all our diagnostic tools, even if they are in the US. So you could migrate your Interactive Broker account under our tier, and then you could benefit from everything that Darwin has to offer. So Mr. C's point is that if Darwinex takes the long and the short of the trade, I really hedge himself, so that's nothing. That's exactly right. That's what a broker does. A broker never takes risk. We are just middlemen, and we're trading with you. So we're against. Basically, we're taking the same bet against Goldman Sachs that you're taking against us, which means we are with you, not against you. And then the question on EdZoom. So we offer only MT4 so far. So we offer MT4, correct? And you can trade with us through FIX, but that's correct. So if you want to have a manual trading interface, we only offer MT4 for the time being. We're already working on it because we know that's a weakness. Any more questions, guys? Either way, thank you so much, because it's been by far the most interactive webinar I've had since I'm with FX Street. So I'm really grateful, because at times you feel like you're speaking on your own, and that's not a nice feeling to have. So thanks so much for that. And Selva, if you have any questions that you want me to cover, feel free to reach out to me offline, and I'll be happy to answer if I can. Okay, guys. So enjoy your summer, and go enjoy the beach. Don't be listening to trading webinars in the middle of the summer. That's not healthy for your health. Take care, guys. Thank you so much.